Are we ready? Yes, we're ready. Welcome back, investors, to the After Hours show brought to you by Ticker Time News. I'm Adam, and boy, oh boy, the market rebounded after Jerome Powell came out and said interest rates are going to stay low, 0 to 0.25%, all the way until 2023. So we can expect low interest rates from now until 2023, somewhere in the range of 0% to 0.25%. That is great. That's why stocks rebound today. And that's why stocks were going down earlier this morning because everyone was waiting on Jay Powell to come out and talk about what the Fed was going to do with interest rates. So we're glad to see that. I'm glad you all are here. Thank you so much for watching. We're going to get right into it. Just as a quick reminder, this show is for you. Leave your ticker symbols in the comments. I will get to them as quickly as possible. um, we're just going to do a real quick recap of the market, just so we're all on the same page, and then we'll dive into the ticker symbols. Let's see. Uh, Writing down the EQ IX ticker symbol to jump into first as soon as I get through the overview, which we're going to jump into now. So just remember, leave a ticker symbol in the comments and we will go over everything from price action. We'll look for support and resistance lines. We'll look for chart patterns that may be forming. We'll look at MACD and RSI, relative strength index, any quarterly financials, try to get some parallels for what may be happening in the future. We'll also look at top news for that ticker symbol. So without holding on any longer, we're going to switch up the screen here. Just give me a quick second to do that and jump into the news. So first off, real quick, as I mentioned when in the open, Jay Powell, the Fed chairman, came out and said interest rates are staying low until the year 2023. Markets rebound after that announcement was made, and that was good news. That kicked off the Dow breaking 33,000 points for the first time ever. Historic day today on the market. So the Dow closed up 0.58%. It was down most of the morning until the announcement came out about interest rates, and then it spiked back up and it broke above 33,000 for the first time ever. That is incredible. Now, the S&P 500 also rebound and broke a new all-time high. The S&P 500 closed up 0.29% to 3,974. The Nasdaq was up 0.4% to 13,525. Other good news that came out today had to do with the housing market. We're going to jump into that in just a moment. But Bitcoin, again, was on a wild ride. It is now back up to $58,704 per coin. That's a move of 1.5%. It also dipped down quite low this morning, waiting on that interest rate report. Ethereum is now back up. It hasn't risen quite as fast. It's only at 1,518 right now. Hasn't risen as quickly as Bitcoin since the news came out. The different segments of the S&P 500, you can see there's not too much green on your screen. There's a lot of red and burgundy, and that's just because a lot of stocks were down heavy in the morning, but they rebounded and they came back up in the afternoon. You can see that consumer cyclicals, which are over here with Amazon, Alibaba, and Tesla in this category, you can see a lot of green there. Amazon up 1.42%. Tesla was up 3.6%, and Alibaba was up 2.83%. And other sectors, they were pretty balanced with green and red here. so not going to go too deep into this. I just want to pull up the bubble chart real quick just to show you guys how you can use it yourselves. The bubble chart, it's a breakdown of the different segments in the S&P 500 closer to the oh, get these ads out of here. The closer to the bottom, you can see here, Appy, the closer to the bottom they were, the worse they did. So you can see Appy here was down 5.23%. And the closer to the top they are, the better they did. Lenora Corporation was up 13.8% today, huge spike at the end of the day. And then everyone seems to be right here along the middle. Um, just something neat that you guys can use on your own to look to see how different sectors are performing. Okay, I do want to jump over to the housing announcement that was made today. Building permits tumbled 10.8% in February, and it was down from last month's 15-year high. So on this chart that you see in front of you here, this graph, this is showing you April 2020 and then January and February all the way to the right of 2021. Um, the housing permits, not every state uses this, but most states do. So it's a good way to judge how housing is. And housing is a big indicator for how the rest of the market is going to do. It's like a very early indicator. So housing in February slipped 10.8%. It is still not too bad, but one reason why it slipped is cold weather. The second reason is interest rates are slowly going up, and material costs are skyrocketing. Take labor, lumber for an example. You need lumber to build houses, and lumber has spiked 200% in the last 10 months. So the materials are skyrocketing right now. So that's a concern for the housing market. Okay, let's jump over to your ticker symbols that you are looking for. So first we have up is EQIX. Let me just double check here. Um, what do you think about EQIX? Can you draw the potential future graphic? Absolutely. All right, so let's go into our charts and we're going to pull up EQIX. All right, let's just get a quick overview of the company. They not too good on earnings here. See, they've missed a little. All right, so from 2017 to 2020. 2017 profit margin 5.3, 2018 profit margin 7.1, 2019 profit margin 9.1, and then 2020 profit margin of 6.1. Revenue of 6 billion, and that's been steady climbing. Net income most recent 369.7 million. That's been climbing too, but did slip in the last quarter that we had here. We can see here on the earnings, they've been missing. They're making a profit. They're just missing estimates. A profit of $1.38, a profit of $1.52, a profit of 74 cents, a profit of 54 cents. And they're looking for this company to make at least a profit of $1.69 in the next quarterly earnings, and this is all earnings per share or EPS. All right, so this is finance real estate investment. Real estate is hot right now, and you did see that the slow off. We did mention it's quite interesting that we mentioned the housing market, and we're looking at something related to that. The housing market did slip in February, but part of that was due to cold weather. And then part of that is due to interest rates going up and materials going up. So I'm going to hop to the 1 day chart. let's get a quick overview here. Yeah, you can see this company has been rising. Good thing. All right, so let's draw our trend line for the past 12 months. We actually have to open this up just a little bit more. All right, so right here. All right, so it was on a really nice trend line, and it broke that trend line in October of 2020. Um, Curious about this dip right here in March. Uh, oh, I'm sorry. My apologies. My apologies. I was on the wrong March. Let's redo this. My apologies. Okay, daily chart, and we are going for 1 year. So it looks like we could put a trend line right here at the start. It took off really quick from March lows of last year, plateaued and consolidated before picking back up on the trend line. Then again, consolidated and picked back up. But then right here, October of 2020 is when it started falling apart here. Let's see. Earnings missed by 51%, 7%, 24% that was expected. 61%. So they're missing on their earnings, and it's their profit that they're missing on. All right, so let's see what else do we have here? All right, let's go to the 1 hour chart so we can take a better look at where we are currently. And I only want 2021 year to date on the chart. Okay, so I see a lot of gaps in here. We've got this gap down right here at the on the left side of your chart. We have another gap down from an all-time high. We have a gap up. All right, let's start charting this out. Okay. All right, so we definitely have something right here at the $662 range. That's there before. Okay. All right, so at the $662 range, and we can bring that down to about a $659, and that can be our box. In this box, it in early January of this year, it held up as support 2 times right here. And then right here, it held up as support, but there was too much selling pressure. And you can see that selling pressure. If you notice, and let me put a box on this to make it a little easier to see. But on the very bottom of the chart, you see these red and green spikes that are coming up, right? You see that? And as we get closer to where the stock is falling from about right here, February, all the way over to say March 16th, you see a lot of volume. That's what these lines are here. This represents volume. If it's a big green candle, that means there was big purchasing volume. If it's a big red candle, there's big selling volume. So volume has picked up significantly for this company going back to February 16th when we had this drop right here. Let me just for you. So this drop right here, there was a lot of volume, and you can see it right here, and that's where the volume kicked off. There was a lot of wasn't a lot of volume until we get to this point, and then it's been, like, maxed out on volume. Um, wow, that's interesting, and that of course, there's more red in here, but there is green at certain times for this stock. Alright, see. So, this support level right here at 659 up to, $662. It it held up as support, and then right here on February the 26th, it acted as resistance and then fell back down, and then it acted as resistance again right here on March the 11th, and then acted as support on March the 12th, and of course wrote above it, but then it broke back down. Let's find some news related here. So not a lot of news that I see right here. Let's hop over to Google Finance and plug this ticker in. EQIX. See if we can find anything. Yeah, we see the downtrend that this 7 hours ago. They're just talking about the downtrend, but yeah, I mean, we definitely see this downtrend. I mean, we can put a line on it. We can do one that looks like this, all the way down to its bottom. So that trend line coming down right here, definitely in a downtrend, but that switched. It's interesting with the news from the Fed today that the stock was down like it was. So we've got that trend line right there. Okay, another thing that we can check for is the relative strength index, and that's in the purple box at the bottom of the screen. We're going to go back out to the 1 day and try and get some historical precedence on how the stock reacts. Uh, so, what I'm looking for is every time the stock comes down, the relative strength index comes down to the bottom of the purple box. That's what I'm looking for. What does the stock do? How does it react? So over the past year, it's only gotten down there a handful of times, and just recently it broke through the bottom, and that was here February 24th, March 5th, March 9th, all right here. It broke through the bottom, and of course, that correlates to it dropping to its bottom of this perfect V shape right here. Okay. I need to find some I need to get some information here because the stock chart isn't telling me a whole lot right now. The company is at the company has been going up. It almost follows with the S&P 500. It kind of tracks right there with it. And I understand why, it being in the finance and real estate investment space. But I want to understand this V right here because it's been in a downtrend. We had it come back up and then dropped hard. And then we have this V-shaped recovery, but then it was down 2.22% today. And I want to understand that a little better. Okay. Um, all right. Technicals on the company are lining up as a sell right now, but that's typical for a stock in a downtrend. Let's see. Market cap of nearly 60 billion. The company is definitely in demand. That is for sure. I mean, it's all of the news updates here, the briefs that they put out. It's they're collaborating with partners. Um, there's spending money to grow. They're just expanding right here in Genova, connecting Africa, Europe, Middle East with infrastructure. Another collaboration to build a digital hub. Uh, looks like they're being added to the Moscow exchange, their stock market over there. Okay, let's look at this right here. Q4 profit ahead of estimates, increased dividend, fiscal year 2021 guidance. That's what I want. All right, so Q4 diluted adjusted funds for operations of $5.76 per share, up from $5.51 per share a year ago. That result comes with a $5.62 average estimate from analysts. Sales rose to 1.5 billion from 1.4 billion a year ago versus a 5.6 billion estimate from the street. The real estate investment trust and leading landlord to data center said its broad set of quarterly cash dividend of $2.87 per share, payable March 17th to shareholders as of February 24th. That compares with the prior payout of $2.60 per share declared in October. They said it expects revenue of 1.5 billion to 1.6 billion in Q1 compared with the 1.59 billion that the market projected or is projecting. In the full year, the company is projecting sales of 6.5 billion to 6.6 billion versus analyst estimates of 6.6 billion. Hmm, so it looks like their outlook for fiscal year 2021 is to grow by 8 to 10% for the year. Slow and steady growth, big company, so they're not gonna grow much more than 10% a year. So here okay. So in the last quarter, in the 4th quarter, they did 1.56 billion in sales. And then it expects to have sales or revenue of 1.59 billion to 1.61 billion in Q1 of this year. So you look at what they did in the 4th quarter, 1.56 billion. Basically what they're saying is we're going to do the exact same thing in Q1 in the 1st quarter as we did in the last quarter of Q4. That's why their estimate is a little just a little higher, but not too much higher. So 1.56 billion in Q4 and then Q1 1.59 billion to 1.61 billion. So they're trying to crank out maybe up to an extra $100 million in the next quarter or in this current quarter that they're working on. So that's interesting. So 8 to 10% growth for the year. Let's just throw that on to where we are right now, and we're gonna say 10% growth, okay? 10% growth puts us at $717.65. And isn't an exact science or exact correlation, but it's just a way to kind of see where it could be using this ratio. If they say they're going to grow by 8 to 10%, let's put 8 to 10% on their current stock price and see what that looks like. And when you do that, it lined up at 717. And then if we put our box at 717, what do we find there? Go 717. We put our box through here. We'll keep it small, say 717 to 720, and we find a couple of things that match up with that. First off, we're finding some resistance as the stock was climbing. If we extended it out, we'd find resistance here. We would have found resistance right here at that 717. But then here, as the stock was rising, we found support. We caught it right here from falling anymore, and this was in September. Caught it there, but then it slipped through, and then it acted as resistance all through this period here, and then it acted as support again right here. So, what I'm thinking is this V shape that it's in right now, it's not going to continue this V shape up like this. I don't think that would happen. What I think that might happen is it could gradually rise like this up to that 717 mark, and then it might just consolidate along that mark until we get some good news or beating expectations on earnings or more partnerships or more teaming up with other companies, more growth in the different sectors and the different countries that they're working in. So this one for me, it'll be a slow grower, is what I'm thinking and what I'm seeing. Um, and like they are projecting an 8 to 10% growth for the full year of 2021. If we take what they have done so far in 2021, so let me go to the hourly chart and let's measure what they've. Actually, there's a quicker way. Just gonna go here and year to date, they're down 5.2% year to date. So if they want to rise and they want to grow by 8 to 10% for the year, then they're going to have to outperform a little bit on their stock price than they are doing right now. And a lot of this downward pressure right here is because of the bond yields rising and interest rates rising and cost of goods rising. So it's becoming more expensive for the company to do business. That's what the downtrend is about. That's what I'm seeing. Does that answer your questions? And secondly, do you have another ticker symbol that you would like to dive into? While you're thinking about that, I'm going to jump into CrowdStrike because they had their earnings come out and I want to go through that company. But just leave a ticker symbol and or question, comment, whatever you would like, and we'll dive into it. So right now, I'm going to look at CrowdStrike. So CrowdStrike reported their Q4 and fiscal year 2021 financial results, and they did pretty well. ARR surpassed $1 billion in milestone, driven by record net new ARR of 143 million. Net new customer growth accelerates, adds record 1,480 net new subscription customers, and delivers record operating and cash and free cash flow. And this is for CrowdStrike again. This is their quarterly results here. So CrowdStrike, leader in cloud delivered endpoint and cloud workload protection. That's what CrowdStrike does, their cybersecurity. So if we go down and look at the highlight reel for the fourth quarter of fiscal year 2021, revenue. Total revenue was 264.9 million, a 74% increase compared to the 152.1 million in the fourth quarter of fiscal 2020. Subscription revenue was 244.7 million, a 77% increase compared to 138.5 million in the fourth quarter of fiscal year 2020. Businesses, companies, schools, colleges, in your personal life, everything is being pushed to being digital, all because of the pandemic of last year. And like I've said many times before, companies may have had a 5-year plan to go digital. That 5-year plan was squished and compressed down to 1 year and that year was 2020 to go digital. So companies were forced to make this move faster than they were anticipating, and that helps other digital infrastructure companies tremendously in 2020. CrowdStrike is a beneficiary of that movement, and it will continue to be a beneficiary of that movement, just like Palo Alto Networks was a beneficiary of 2020. Annual revenue increased 75% year over year and grew to 1.05 billion as of January 31, 2021, of which 142.7 million was net new ARR added in the quarter. Subscription gross margin GAAP subscription gross margin was 78% compared to 75% in the fourth quarter of fiscal year 2020. Non-GAAP subscription gross margin was 80% compared to 77% in the fourth quarter of fiscal year 2020. Income loss for operations. GAAP loss from operations was 15.8 million compared with 31.1 million in the fourth quarter of fiscal year 2020. So they've gotten their costs more under control with the increased revenue that they're making. The company will hopefully be turning a profit there soon. Non-GAAP income from operations was 34.4 million compared to a loss of 6.7 million in the fourth quarter of fiscal 2020. Should have kept my mouth shut right there was the profit for them. Net income loss, GAAP net loss was 19 million compared with 28 million in the fourth quarter of fiscal year 2020. Again, that's getting better, lowering cost, increasing revenue. Lowering your cost to produce that revenue is what you're seeing. GAAP net loss per share, basic and diluted, was 9 cents compared with 14 cents in the fourth quarter of fiscal year 2020. Non-GAAP net income was 31.6 million compared to a loss of 3.9 million in the fourth quarter of fiscal 2020. All right, cash flow. Net cash flow generated from operations was 114.5 million compared to 66.1 million. So a big increase there in cash flow. Free cash flow was 97.4 million compared with 50.5 million in the fourth quarter of fiscal year 2020. So almost doubling their free cash flow. Cash and cash equivalents was 1.92 billion as of January 31, 2020. So they have a lot of cash on hand to grow. That's excellent for CrowdStrike. All right, for the full year of 2021, revenue. Total revenue was 874 million, an 82% increase compared to 481 million in fiscal 2020. Subscription revenue was 804 million, an 84% increase, even bigger increase compared to 436 million in fiscal 2020. Subscription growth gross margin. And again, this is for the full year. GAAP subscription gross margin was 77% compared to 74% in fiscal 2020. Non-GAAP subscription gross margin was 79% compared to 75% in the fiscal year 2020. So again, growth. Income loss from operations for the full year. GAAP loss from operations was 92.5 million compared with 146 million in fiscal year 2020. That's great. Um, Non-GAAP income from operations was 62.4 million compared with a loss of 65.6 million in 2020. Net income loss. GAAP net loss was 92.6 million compared with 141 million in fiscal year 2020. So again, it's great to see that uh, costs becoming under control and revenue increasing. So the cost to produce that revenue is tightening, and eventually they will be profitable. Okay, GAAP net loss per share, basic and diluted, was 43 cents compared with 96 cents in fiscal 2020. So great job to CrowdStrike. Cash flow for the year, net cash generated from operations was 356.6 million compared with only 99.9 million in fiscal year 2020. So almost let's see, 250 million gain on that. Free cash flow was 292.9 million compared with only 12.5 million in fiscal 2020. So you can see that revenue, that extra revenue that they had in 2020 really I'm sorry, in fiscal year 2021 really kicking in for their cash flow. A couple highlights for CrowdStrike, and then we'll go look at the chart, but I'll check to see if there's any ticker symbols left too. Added 1,480 new subscription customers in the quarter for a total of 9,896 subscription customers as of January 31, 2021, representing 82% growth year over year. Like I mentioned earlier, the 5-year plan being crushed down to a 1-year plan for all of these companies to go digital really helped CrowdStrike and other companies in their sector. CrowdStrike's subscription customers that have adopted 4 or more modules, 5 or more modules, and 6 or more modules increased to 63%, 47%, and 24% respectively as of January 31st, 2021. Okay, acquired there. Let's see, skip that one. These are all different things that CrowdStrike did over the year. Okay, looking good. All right, so I want to just check the chat right quick. All right, now I'm going to hop over to the chart for CrowdStrike. We've already got this one, Max, done out, marked out. Okay, CrowdStrike, ticker symbol CRWD. All right, I'm going to go to the 1-day chart so we can get a feel for this. I'm just looking back at the past 12 months here. So you can see from March 20 lows right here, a beautiful trend line that they were following, broke down a little bit in August, picked back up, spiked on earnings right here because they were just doing great. And then followed the trend line again, using it as resistance on the way up. And then in October, really kind of broke down a bit. But then towards the middle of November, they picked back up all the way through December. And since then, you can see they have been consolidating up here after reaching this all-time high of $251.28 right in the middle of this mix of consolidating. Okay, so let's go to the 1-hour chart so we can get a better look of what's happening right now for CrowdStrike. So I only want 2021 in the frame here. So you can see they are consolidating, and it's the blue line at the bottom at $194. And then you have a second support line, the blue line in the middle. That's at about $208. And then you've got this resistance line at $226. Okay. So support, if we look at this chart, if you see the red circles, there's 4 of them here for you. All 4 of them correlate to the purple box down at the bottom, and this is the relative strength index. Every time the relative strength index fell outside on the bottom side of the purple box here, that means the stock was oversold. Every time it popped out of the box we have a rally immediately afterwards. So this is something to keep in mind and watch the relative strength index because there has been a correlation. Every time it dips below, we get a rally. Every time it dips below, we get a rally. Dips below, we get a rally. Dips below, we get a rally. And right now, we're kind of in this consolidating holding pattern right here between $195 as the base of it and $208 as the peak of this consolidation phase. And this was implemented March the 9th through today, which is the 16th. Okay. So, or 17th, excuse me. Today is the 17th. All right. So, where is this stock going? Well, it looks like it's in consolidation until we get some better news or something occurs in the economy as a whole. One thing that helped is that int I ish excuse me, interest rates are going to stay low through 2023, so that's a good sign and indicator for them. Alright, let's look at any top news. Let's see, CrowdStrike delivers very strong Q4. Yep, they sure did. Q4 results on broad-based growth. Yes, they sure did. As we went over those financials there, they did a great job. Yeah, tech stocks declined, but tech stocks they did decline today on the 17th, but they also pulled back up as soon as the Fed chairman said that interest rates are going to be unchanged. They're going to stay at 0 to 0.25% until 2023. All right. So that was good for them, and that's what caused the stock market to rebound in the afternoon hours on March the 17th, and for the Dow to break above 33,000 points for the first time ever. That was incredible, incredible rally in the afternoon, and you can actually see that right here on this last big green candle for CrowdStrike on the 17th here. I mean, it shot up to the top of this box. Is it enough to break through this box? I'm not sure. Not yet. Um, but we'll probably have a nice green day for it. I mean, you can see the stock was up 5.9% today. So it bounced off this bottom bar of $195. It actually dipped down. You can see this one red candle right here, the candle wick actually dipped down to $191 today, but then it got to its highest point of $210 today before settling back down around the $208 mark. Okay, so that's the support and resistance and what's happening with CrowdStrike and the consolidation right now. Um, just CrowdStrike is going to need some other good news. I know we've just had earnings for CrowdStrike, so it's going to need something more than that from them. Okay, that'll wrap it up for CrowdStrike. All right, we'll hop back over here real quick and just check the chat for any ticker symbols. Remember, this is for you. Like we did at the beginning of the show, leave your ticker symbol in the comments and we will go over that ticker symbol. We will look at the charts and uh, dive into the price action for the day to find the support and resistance price points so you know exactly where to get in at on that stock. We look at we look for chart patterns, which are indicators for what could be happening to the stock, quarterly financials, and top news. So leave the ticker symbol, even if you're watching this broadcast after it aired live and you're watching this on your own, leave a ticker symbol in the comments. We look at the comments, we read all of them, and we will take that ticker symbol, that company, and we'll start with it in our next show. So, I'll just give you a couple more seconds here, or a minute or two, to leave your comment. We'll switch this up. A good way to support our channel is number one, smash that like button. We definitely helps our channel out. And number two, click the like button. Sorry, subscribe button. Click the subscribe button. Join our family of investors. Um, we share our knowledge with you and we go through your favorite ticker symbols. The third way, smash the like button, click subscribe. And the third way you can help us out is by going to our Patreon channel and becoming a patron. We really appreciate all the support that we get through there. You can also check out our website at tickertimenews.com. We put out earnings report there. It's really just us kind of following on and reporting on some of the companies that we like the most. So that's going to wrap up this episode of After Hours, brought to you by Ticker Time News. I'm Adam, and I will see you tomorrow after the markets have closed. Have a good night, everyone.